DCC Energy's board has unanimously recommended a £5.75 billion takeover by KKR and Energy Capital Partners. Shareholders will get £65.25 a share in cash, plus a 147.22 final dividend, with up to £1.25 more if the group's Nexora Tech unit sells for at least $800 million. The consortium's price represents a 24 to 26% premium to DCC's undisturbed share price before bidding emerged in April. Yet DCC shares rose barely over 1% on the announcement, closing near £63.60 against the agreed £65.25 cash terms. Chief Executive Donal Murphy told Reuters the board's rationale. He said the company had simplified its structure and spent years courting investors, but that effort never translated into the valuation private capital was now willing to pay. DCC's own founder, Jim Flavin, called himself astounded by the board's decision, saying he regards the price as totally inadequate. Fidelity International and Aviva investors, both major shareholders, have said they will not support the deal at this level. Flavin specifically attacked the structure of the offer, noting the final dividend included in the headline price had actually already been paid out the week before. He called it a charade that a responsible board would present it this way. Together, the 5 opposing shareholders hold more than 15% of DCC's stock. Murphy countered that one dissenting shareholder had already sold down a large stake at a price below what the consortium is now offering, which he used as evidence the board's confidence is well-founded. He said the board still expects the majority of shareholders to back the deal when it comes to a vote. DCC is not an isolated case. It is one of 11 deals worth over £1 billion struck on the London Stock Exchange this year, as foreign private capital pursues what analysts call undervalued London-listed companies. UK mergers and acquisitions activity in 2026 has already topped $197 billion, the highest year-to-date figure on record. Shareholder meetings are expected in September, with completion targeted to the first quarter of 2027. The final value shareholders actually receive still hinges on one unresolved condition: whether DCC completes the sale of its Nexora technology division at or above the $800 million threshold that triggers the extra £1.25 per share. The dispute is not really about whether DCC has value beyond the headline number. Both sides agree it does. It is about whether a founder and a handful of large holders, controlling roughly 15% of the register, can rally enough of the remaining shareholder base to reject a board-endorsed offer. On the numbers disclosed so far, that coalition falls well short of a blocking stake, which is why Murphy's board still expects the deal to pass in September.